Hi, I'm Michael Lopez, owner and president of Alpha Mortgage. I'm excited to share with you a series of short, informative videos featuring industry experts from our area. From finding a home and making an offer, all the way to closing day, we'll answer questions that will explain what goes on during the home buying process. So let's get started. Tell me, what is an owner's policy of title insurance and why should I get it if I'm an owner?
Yeah, so
Because we have to have the lender's title
that's
policy, right?
So every lender requires a lender's policy of title insurance. It's where we go out, we research the property, everything that touches and concerns it, send that off to a title company. The title company says, this is good title, you're getting clear title, and we'll insure it. We feel good about it. So every lender requires that. Now, an owner's policy is optional at closing. Typically, depending on your loan-to-value ratio, it's an extra $26. So I'm doing a 26 bucks. Now, here's how it works. That lender's policy protects only the lender. So if they decline an owner's policy and a title issue pops up later and they decline the owner's coverage, even though there was a lender's policy, the lender's covered. The owner themselves are not. Now, what happens if, let's say interest rates drop? Right now, interest rates are higher than they've been, and you're gonna go refinance. You're gonna have to get another loan policy again when you refi, 2 years, even though you just got one today and you're gonna refi in 2 years. That owner's policy you paid 26 bucks for at closing is good forever. It's like
it just follows you.
Yeah,
as you
it's like
refi.
100. Yeah, it's well, and even beyond your time in ownership, right? That owner's policy never expires. So you sell your house and then a title issue pops up 20 years after you've sold it, your title insurance policy still protects you. When that loan goes, that loan policy dies.
I should have known that, but
yeah.
I didn't.
So I tell everybody, it's not that much money. If you've got, if it's a $500,000 house, you're putting $250 up, and the lender's putting $250 up, your owner's policy is going to be more expensive in that it's based on the purchase price.
Right.
But where it's close, like a VA loan, where the 100% of the value of the purchase is in the loan, your 26 bucks is what your owner's policy, and it's going to be good forever.
Excellent.
And it protects you, right? So where the lender's protected on theirs, yours is protected on yours.
Is that something I can pay as a lender for my VA clients?
Yeah, so you could probably add lender credit to cover the $26 or whatever, depending on the price of the loan, the owner's policy. But I, as a default rule, my engagement letter and my discussions with clients is I order them unless you tell me not to. I'm always going to get you an owner's policy, and part of closing with me is sitting down and explaining this is your title commitment. You're going to get an owner's policy, a title insurance in the mail. It's worth hanging on to. You're going to get a lot of junk mail after we record, offers for equity lines of credit and all that stuff. But when this policy comes in the mail, hang on to it. It protects you. They won't need that piece of paper. The policy's always good. We find 1985 policies by reaching out to title companies and say, hey, you have an old policy on this. So it'll still be good once you pay that premium, but it's a one-time cost at closing. You pay it, and then you never have to pay a premium again, and it protects you forever.
Excellent.
So I tell everybody, and on cash deals, obviously, you can only get an owner's policy, and in that instance, I tell everybody, yes, you should absolutely do it.
I'm Michael Lopez, and thank you for watching. If you like this video, please give us a like and subscribe if you're not already, along with clicking the bell icon to be notified when we put out new videos. If you want to know more, please visit www.alphamortgage.com.